Hey everyone! Welcome back to our channel. Today, we're going to dive into how you can reduce your taxes by using the best cryptocurrency accounting method. If you're investing in crypto and want to maximize your gains while minimizing your tax burden, this video is for you. Let's get started. Let's set the stage with a quick example. Imagine you purchased one Bitcoin 14 months ago for $15,000 and another Bitcoin 6 months later for $40,000. Today, you sell one Bitcoin for $60,000. Great move. But is your taxable gain $45,000 or $20,000? It depends on your crypto accounting method. The default method for calculating your crypto gains and losses is FIFO, or first in, first out. With FIFO, the crypto units are sold in the order you acquired them. Let's break it down. Say you bought one Bitcoin on January 1st, 2022, for $15,000, another on January 1st, 2023, for $25,000, and another on March 1st, 2023, for $40,000. On January 1st, 2024, you sell one Bitcoin for $60,000. Using FIFO, the cost basis for the sale is $15,000, the price of the first Bitcoin you acquired. This gives you a capital gain of $45,000, which is a long-term capital gain since you held the Bitcoin for more than 1 year. FIFO is simple and conservative, and the IRS will never complain if you use it. It also makes it easier to achieve long-term capital gains treatment. However, in a rising market, it often results in the highest taxable gains since you're selling the oldest, and usually cheapest, crypto first. Now, let's talk about the specific identification method. This allows you to identify which crypto units you're selling in a particular transaction, potentially lowering your taxable gains. If you choose to sell the Bitcoin you bought for $40,000 instead of the one for $15,000, your taxable gain would be only $20,000 instead of $45,000. This is where specific identification can be advantageous. There are also variations within the specific identification method, like HIFO, highest in, first out, and LIFO, last in, first out. With HIFO, you sell the crypto units with the highest cost basis first, often resulting in the lowest capital gains. For example, if you sold the Bitcoin bought for $40,000, your gain would be $20,000. LIFO, on the other hand, means you sell the most recently acquired crypto first. If you sell the Bitcoin bought for $35,000, your gain would be $25,000. Using these methods requires meticulous record keeping. You need to track the date and time each crypto unit was acquired, the cost basis and fair market value at the time of acquisition, and the date and time of each sale. If you lack adequate records, the IRS will default to FIFO. Most crypto owners find it nearly impossible to keep these records manually. That's where crypto tax software comes in handy. These tools can automate the basis and gain/loss calculations and even fill out the required tax forms for you. You can change your crypto accounting method from year to year without needing IRS permission. This flexibility allows you to adapt your strategy based on market conditions and your financial goals. Be aware of proposed IRS regulations that may impact these methods starting in 2025. These regulations could make it harder to use specific identification by requiring that you identify each unit to be sold no later than the time of sale. If not, FIFO must be used. Contact me in the comments for the full report with supporting IRS rules.